everyone, here we are with a few stocks that I want to share with you guys. Um, I've never done this before, and I plan on starting to do this monthly or even weekly if I can, talking about stocks that were great to buy in the year 2020, and it's not late or ever too late to be part of the growth that will continue to happen in these stocks. So these stocks have grown tremendously in the last 6 months, but which is what we're going to be talking about, and even year over year in the last couple of years. But what I do want to state is that these stocks still have room and potential to grow, and they are great to add to your portfolio. And these aren't just the only ones, there's many of them. So I'm going to break it down to make these videos not too long. I'm going to speak about 3 of them. So everybody that's here for the first time, welcome to my channel, Invest for Tomorrow. And to all my subscribers, I want to say thank you, and I hope this video means you well. So NVDA year over year has gone up tremendously, but in the last 6 months from the dip till now, even after this slight sell-off that we had in the last couple of days, it's 157% above, and it's 192% from the dip to the highest point that it's reached. NVIDIA, I know that right now everyone is a little bit kind of on the fence of, are these stocks finally bursting the bubble and going to start falling, or is the market readjusting itself, or should we wait till after the elections? I'm not here to tell you guys to buy. I'm not here to tell you guys to sell. I'm not here to tell you guys to hold. I'm just here to inform you guys about stocks that some of us may overlook or may know about, but we're not seeing the value in them. And these stocks have so much potential for the upcoming years. NVIDIA just recently launched a lot of information, and articles are all over the place about a new chip that's going to change gaming experience. I mean, they're doing great with that. Their innovation with artificial intelligence, their chips, and so forth for cars, for phones, and for computers and gaming is just definitely dominating the market in that sector of chips. And their chips are cost effective and also giving the best results and return in gross profit for them, right, as a company, because their profit has been growing over the years. Their debt also has been going down and so forth. So this company, if you guys take the time to look at their balance sheets and their financials, they have a pretty strong balance sheet and income statement and so forth. But NVIDIA is doing tremendously good with that, and they are dominating it with the great quality for what you get and what you pay for NVIDIA's chips and graphics, right? So NVIDIA has a lot of potential. They've been growing. If we go year to date, you can see the growth. If we go 1 year, 5 year, you could definitely see how this company has been growing over time on the year to date, on the 1 year, and then also the 5 year. They had a slight drop here, as we could see, in 2019, which is probably the lowest point after the bullish run way back from 2015 till 2019. And then from there on out, it started to work its way back up after it rose and slightly leveled off again. And from there, it just took off. And that's literally June of last year. And here we are in September, seeing this at $500. If we go to max, I mean, to think that NVIDIA was a company that once was worth a dollar and even probably less is tremendous stuff. And NVIDIA, if it continues to healthily grow in this matter, it could probably even do a stock split. So that's something a lot of people will be excited about and probably finally believe in NVIDIA and start to actually get on in it. A lot of people are missing out on the market share here of owning these stocks and actually taking advantage of how much growth and profits you can be taking from this stock. I mean, before this slight dip here from September 2nd to the 4th, this stock was raising up almost every day between $5 to $15 or more in the last couple of months, day by day. And that's very interesting to see that growth and potential that NVIDIA is having. And NVIDIA will continue to grow as gaming continues to be innovative. They're being part of the automotive industry, so they're not just in computing, graphics, and so forth, but they're doing technologies with cars and being part of their computer systems. And then just mobile and computers itself. I mean, NVIDIA is going to continue to create that exponential growth that it can actually obtain, and the potential is there and it's showing it. Apple stock. Well, Apple just had a split. Apple has proven itself and it's been dominating the market in phones. And that's all it wants to continue to do. And in the last 6 months, if we go from the dip all the way to the rise, it's a 139%, and then after the slight sell-off and drop, it's at 115% over the last 6 months. I mean, Apple has been growing tremendously, and it's actually the one with the highest market cap right now. It's, I think, already at 2 trillion, if I'm not mistaken, and this is just going to continue to grow. Apple has proven itself. It's created a brand and it's a name, and it's just completely dominating the phone market. They're also doing great with their market share on computers, their services, and Apple is just continuing to grow in that aspect, and the potential is there. It's a company that already has proven its potential, and there's just so much more potential for innovation and newer things. I mean, Apple is going to be a while for somebody to actually come and take their share of the market and part in doing what they do best, which is literally um, reach everybody and really sell quality products, and also continue to focus on gross profit. Like, they sell these products at such a high turnover rate of ratio of turnaround, right, of revenue, that is tremendous, and they walk away with their profits. So Apple is phenomenal. They did this stock split, and they did a stock split in 2008, and they just did this one, and they've done both of them in very healthy moments when their revenue and net profits have been good. If you look at their income statements and balance sheet as well, it's looking pretty strong. It's looking with a great outlook in the next coming years, and the potential is there. Apple, I don't believe, is a stock that you're going to end up really stating, oh, wow, that was a bad buy. If anything, you're going to be very glad that you're part of it. And again, I'm not here to tell you guys to sell. I'm not here to tell you guys to buy. I'm not here to tell you guys to hold. I'm here to inform you guys on stocks that have had great growth potential in the last year of 2020, best stocks to have owned in 2020, and stocks that it's not too late. And you guys make your own rational decisions as investors to go ahead and enter where you find most comfortable as an entry point. But all I can say is that wherever you enter right now, these stocks are going to be worth more than where you entered, even if they were to drop below that at some point in the next year or two or upcoming years. There will be growth, and they will continue to grow. The next one is PayPal. PayPal has had a tremendous run in the last 6 months as well, and it's grown up 147%, and then after the slight dip, 125%. And year over year, it's grown tremendously. And after 1 year, and if we go back to 5 years and max, literally since 2015 to where we're at now, the growth is outrageous. We're talking about 300, 400%, almost 500% growth, and PayPal is going to continue to grow. PayPal with the contactless payments and transferring of money. Some people are even using PayPal as a bank to the point where they're actually putting their money into that, and they transfer it out when they need it. A lot of people also have their small businesses and they use PayPal to go ahead and receive money and even to send money. So they have a great secure system, and PayPal is definitely dominating the market as more people are becoming open to e-commerce as well, and PayPal is one of the forms to receive payments. Um, Another thing too, receiving payments just online in general and not in person. PayPal is dominating that sector of being one of the forms of creating transactions, um, virtually through the web or through websites or through people's accounts and sending money and receiving money and charging money here and charging money there. I mean, people are definitely using PayPal as well as Square is another great one with the Cash App and the Zelly and all that um, in that area. But PayPal has a pretty secure way of handling things as well as Square. But PayPal has had tremendous potential, and the potential will be there to continue. They have a lot more accounts with a lot of other companies, and just it's as long as e-commerce is something that is going to exist, in which it does, and a lot of people start to transition from having registers and having stores that are physical and turning their stores into e-commerce. PayPal is one of the main ways to secure the transaction, and PayPal is definitely dominating in that sector. And the growth will continue. Um, Great growth potential, and PayPal is definitely innovating and working on continuing to grow. And if you see it in their financials, they have picked up some debt and so forth. And 2017 wasn't the best year for them, but they've actually been growing over time, and they're here, and they're going to continue to work their way up to newer highs, not just in the stock, but in revenue and net profit and so forth. So these are three great stocks, back to the purpose of this video, that were great to own in 2020 or have bought. And I'm here to tell you guys it is not too late to buy them. I'm not here to tell you again to buy, sell, or hold. I'm just here to inform you guys on stocks that you should add or look into adding, I should say, into your portfolio, so that you guys don't miss out on the opportunities on how these companies are growing, and you can just get your piece of the pie by joining in and investing in them. Great potential here. I know Nvidia's up in the 500s, Apple's in 120, and PayPal's at almost 200. One of the best ways to add these into your portfolio is if you were to tell yourself monthly, $1,000, I want to invest $1,000. You can buy yourself a Nvidia stock, you can buy yourself an Apple stock, and you can buy yourself a PayPal stock. And right there, you got yourself about $1,000 of investing into the market. As long as they're at these prices, and if their prices start to go up, you may have to, create a wiggle room in your investments. But one thing I can tell you is that is one of the smartest ways to create your portfolio to grow, and especially in such great companies like Nvidia with the growth that it has. And yes, a lot of people are saying that it's probably in a bubble. And even if this was to slightly fall and the bubble was to burst, I'd pay very close attention the next coming weeks, maybe even months before making a decision. But I do want to inform you guys that these are great stocks to have in your portfolio. And they're saying that not only Nvidia, but tech stocks and financial stocks that are having to do with e-commerce and anything in regards to technology and innovation, there might be a bubble. And okay, I don't want to rebuttal that and say that's an opinion or a fact. And I'm not saying that that is not true or it is true or it could or could not happen. But one thing I am to say here is that I'd pay very close attention to how these stocks react. And as investors, you guys will have to make your own rational decisions to decide when is a good entry point. And from that moment forward, consistently buy and add these to your portfolio. And when you look back, because anybody that bought a year ago and they bought, let's say, at 236 and they started buying every single month, right? This has been going up a total of about 150% almost, and it went up by $300. If you were to just buy, let's say, 10 shares per year and so forth, that's what it did in this year. And if we go back to 5 years and you did it per year, and let's start right here at 2018, it went from 195 to a total amount of uh, three, a total amount of five and some change, excuse me. And it went up by 330, and you bought 10 in 2018, you bought 10 in 2019, and you were able to buy only 7 in 2020. And you started here at a total amount of 215, and there was a slight dip. So your total average probably went down, and it went up by 330. That's about 20 stocks. So right there, you could do the math and figure it out. Same thing with Apple. Year over year, you could see if you were doing it in the last couple of years, and if you did it in the last 5 years, and you started in 2018 buying, shares as many as you can, and this one you were able to buy, let's say, again, 10 shares per month, and it's been growing since 2018 all the way till now. They would have grown, in total amount about $81. I know that your average might have started to go up a little bit around the beginning of this year, but if you think about it, you ended up with 20 of these shares and they went up by $80. There you go. That's your profit. And so forth. Same thing with PayPal. If you guys as investors start to set these goals and you haven't thought about the stock market in this way, this is the way you need to start thinking about the stock market. Not the quick returns, not the artificial growth that's been going on in the last couple of months, because that's all from the Federal Reserve. These are more natural growths when you look at the 5 year and you just look at 2018 to like the peak before the fall of 2020. They went up, each share went up about $38 from when you bought in 2018 till now. And then when you look at the growth that happened, tremendously here. We're talking about 123 per share since 2018. So, I mean, that could continue to be some type of form of growth in the near future, but the real growth is what we see in the steady times here of about 40, $30 of growth per share, which is still tremendous gains. And you guys should set yourself aside an allowance to buy certain shares. And these are three great companies to keep in mind, specifically Apple, because it's proven itself to grow. And PayPal is just showing healthy growth from the beginning. And NVDA, it took a long time to get here, right? And the real growth started around 2017. There was a massive dip, but it stayed above $100. And here we are seeing massive growth in this time. Could there be a bubble? Who knows? Could there be a bubble in Apple? Who knows? Could there be a bubble in PayPal? Who knows right now? I don't have those answers. I just want to advise you guys to pay close attention and start to think like investors that aren't just looking for that quick return. That's great to look for that, and those are some great moves, but you guys should set aside an allowance to build your portfolios, because investors that actually say, I've done a great job in investing and this is how much I've invested and this is how much I have, are the investors that start to invest little by little, grow their portfolio, and once they're ready to take profits on a certain sector, on a certain stock, based on their rational decisions and goals, then they can go ahead and start to cash out. And your investments over the last 2 years on a stock, for example, if you're able to buy 20 of these, that's a total amount of about $2,400 or $2,200 that you invest right now over time if you were to buy them all around 120, 130. And then in the next 2 years, it hits all of a sudden $200 again, your shares just went up by $80 each. And if you have 20 of them, that's $1,600 return. And that's the point of investing, to have a return. I know that we're all looking for those quick returns. If you're a day trader, I support it because I day trade too. If you're a swing trader, I support it because I swing trade too. But you have to have a portfolio being built so that you can go ahead and actually create not just something that you can look at and say, oh, wow, look how much I've made, but actually create more money than what you started with. And it really does create that over time. Whatever you buy today, and it's a growing stock, and it's a stock with so much potential, right? Like NVIDIA right now, Apple, and PayPal have proven. And I know that a lot of people are saying there's a bubble. I'd wait. If you feel like that, I'd wait. If you feel bullish and confident about these stocks, even if there is a bubble and you believe in them, then you make your own rational decisions and due diligence. But if there's a bubble, I'd wait. But the moment that you see the bubble actually happen, if it actually does, because I'm not even sure, well, a lot of analysts are saying it may, a lot of people are skeptical that it may, a lot of people are saying that this quick dip that we just recently saw in the last couple of days, right, from a high of Apple hitting 137 to hitting lows of 114 and 113 and 110 and so forth, then people are saying that the bubble's about to burst, and it has, and we're going to see it. We'll see how it goes. But also, elections are coming up, a lot of uncertainty. It's very rocky right now. But what I want you guys to take away from this is to start investing with an allowance into companies that are growing. If you want to play your penny stocks, play your penny stocks, because that's that risk to reward ratio that you're willing to go ahead and do. If you want to go ahead and buy stocks that are hype right now and buy a certain amount and day trade it or swing trade it to the next day or play options and puts and so forth, great. That's what this is all about. We're all here to play a little bit of everything. But the most powerful investing that actually shows you returns over time is building an allowance and buying into the stocks that a lot of people are avoiding. Oh, it's $120, for example. Apple right now. Oh, it's $114 on September 4th at 11:30 a.m. Any stockholder would have been like, oh, it's $114. If I buy it and it falls $2, I'm losing $2 per share, and that's a lot. And then if I was to sell it and it goes up and boom, it went up to 120. Oh, it's only $6 a share. I only was able to buy 10. I just made $60. What the heck was the point of that? I almost reached 100, 1,000. 1,140, excuse me, to make $60. What type of risk is that? Well, this isn't the type of stock that you would really want to do that unless you can buy a lot of volume. And if $60 to you is a lot and that's a great return, that's great for you too. Because to be honest with you, my way of investing is as long as I make $1 into $2, I've already won. That's the way I look at it. We all have our own perspectives, but that's my best advice. If you can turn $1 into $2, you've already won. Obviously, we want to make as much as we can, but these stocks here that I'm showing you, these were the best stocks to have owned in 2020, and it's the best stocks to own in the upcoming years because they're going to continue to grow. I would really advise you guys to build your portfolios. And again, I'm not telling you to buy now. I'm not telling you to hold now. I'm not telling you to sell now. I'm telling you to be aware of these stocks and stop watching them from the sidelines so you guys don't miss out on the profits and can start to build a portfolio that will continue to grow over time. These are the type of stocks that you want to get in on and hold, and I look forward to doing more videos like this. I hope to hear your guys' feedback and also what you guys think about what I've stated, but I do plan on doing videos like this, hopefully weekly or monthly. I'll talk about 3 to 5 stocks in regards to the ones that were great to buy now in 2020 and also great to buy in the near future or for the next coming years, and if it was too late, because it's not too late. These stocks have potential to continue to go, and it's not too late to be part of them. Now, is it at its peak? Well, yeah, they're kind of close to their peak. So we need to understand that if there is a bubble, I'd pay close attention. But another thing too, they may be at their peak right now, and they're gonna actually continue to go from here on out to newer highs, and we don't even know if there's a bubble or if the peak is just something that's going to continue to happen with these stocks. So watch them carefully, do your due diligence, and my best advice is start a little allowance of $1,500, $1,000, or $800 where you can fit in these stocks. And honestly, at most, for you to be able to buy one stock per month of NVDA, Apple, and PayPal right now, you'll need at least $800, at least $900, about 1,000 to be more comfortable. And with 1,000, you'll be able to fit all of these in. But right now, with NVIDIA at 504 and Apple at 120, that's right there a total of $624 plus 191, which is basically $200. You're looking at $800 and 24. So you can actually squeeze another apple with $1,000. You can buy 2 apples, you can buy a PayPal, and you can buy a NVDA, or you can mix and match. But at the end of the day, NVIDIA is going to take up most of it. And right now, NVIDIA has grown tremendously. If you don't feel comfortable putting that much into one stock and you want to watch it carefully, well, one stock to definitely start building your portfolio in, since it did the split and it's at a great price, is Apple. And PayPal is still looking like it's a affordable price for what potential it has in the near future. And if you don't feel comfortable in that one, just watch it. And Apple will definitely be one of those that, even if it was to dip slightly, $20, $15, $10, 40, even $40, let's be exaggerating, this stock will recover and start to grow. And as it continues to dip, it's one of those that, if you don't feel like buying at those dips, you're missing out on discounted prices, because Apple is going to continue to grow. And if you don't feel comfortable in NVIDIA and PayPal just right now, take a close eye at that and watch them. But definitely plan on having NVIDIA in your portfolio in the near future, Apple for sure, and PayPal, because these are stocks that are stated to be growing. They're showing growth. You look at their financials is showing nothing but growth right there. Let's go to Apple's financials, right? If you look at them, they've been nothing but growing as well. And it's just upward trend. Net cash on hand has went down slightly a bit. Um, and cash on hand, I'm assuming that they've done different uh, investments that have done some type of reason for this, but their cost of revenue slightly went up, their operating went up, but then their net profit slightly went up, their net income went up, and their revenue has been going up. And as you can see, it's just growing and growing and growing. So tremendous opportunity to not miss out on this. Revenue is a good sign. Net income is a good sign. The net cash and the cash on hand, they can recover that. They still have cash on hand. It's not like it went down to zero. It's just slightly going down from March, slightly going down from December, and slightly going down from September. And that's probably because they've had a little bit of extra expenses that they've needed to actually go ahead and disperse amongst everybody. But the most important thing is revenue is still coming in, net income, and there is growth for that stock. And NVIDIA, let's go ahead and look at their financials. You can definitely see that they're growing as well. And their net cash on hand and cash on hand has actually went down by 50%. This is actually a little bit more than expected, but their total amount of income has gone up. Their revenue has gone up, and if you can look at April, they had a lot of more cash on hand, um, and so forth, and everything was growing. In January, it was growing. In October, everything was growing, but you could see that revenue and net income was not as strong. But July, cash on hand, there's been some expenses and costs, but they're growing in revenue and their income is growing, and there is so much potential for the stock to continue to grow with all the things that they've been doing and innovations. So keep those in mind. Hope that this video again was helpful. I look forward to doing more videos like this to help people out. And my best advice is start building that portfolio and don't miss out, because sometimes just because you can only buy 1 or 2 stocks a week or a month, we hold ourselves back from building that portfolio that if we were to do it just monthly and try to buy one and try to buy one, and after a year we look back, our money does double, and that is tremendous opportunity and growth. That is more than the 10% growth that most people would expect in dividends, or even just in overall market. So I hope that this all means you guys well, and share this with your friends and community. If you feel inclined or encouraged to subscribe, don't forget to click the bell so that you don't miss a single video that I post. And thank you guys so much for watching, and let's make some money.